Now, when we talk about a fixed place of business, this would typically consist of various places which are generally outlined in any international tax treaty. And these would be similarly available in the existing UAE tax treaties which are there. So what exactly is included in a fixed place of business? That includes a place of management, a place from where the business is managed. So if a non-resident has a place in the UAE from where they manage their business, this place will be construed as a fixed place of business and therefore constitute a PE. In place of management, it is not necessary that it should be owned by the relevant person. Even a rented premise which is used or a fixed place which might be available to the non-resident in the UAE for conducting their business can constitute a place of management. A branch of a non-resident or foreign company in the UAE will be a fixed place of business by default and therefore will constitute a PE. An office which a non-resident may have in the UAE. Now, this office can be a temporary field office or even the home of the employee which is being used as an office by the employee. As long as it is there available to them as a fixed place, it would constitute a PE. A factory of a non-resident in the UAE, a workshop or a real property, and a building site where the activities are carried on for over 6 months. All these will constitute a fixed place of business and therefore a permanent establishment. Now, as a part of this course, once the part relating to corporate tax is over, we will be adding a few lectures where we were going to deal with the concept of PE as enshrined in the OECD model. So we will have a look at various clauses of the OECD model under which the permanent establishment can be constituted, so as to give you a heads up in terms of what to expect as the law is rolled out. In addition to this, installations and structures which are used in the exploration of natural resources will also be considered as a fixed place of business. Now, you must be wondering that when the income from exploration of natural resources is exempt from tax because it is subject to tax at the Emirates level, why is it that the concept of PE is relevant insofar as these installation and structures are concerned? The answer to that is pretty simple. The company which might be engaged in the exploration of natural resources may be different from a company which is providing these installations or structures or machines. When we talk about the permanent establishment concept in this particular case, it refers to the entities who have installed structures and not necessarily the companies which are engaged in the exploration of natural resources. Mines will also constitute a permanent establishment. An oil or a gas well will also constitute a permanent establishment, and other places of extraction of natural resources, they can also constitute a fixed place of business and therefore a permanent establishment. The income of the company which is engaged in the exploration of natural resources, again I'm repeating, is subject to emirate level taxation and therefore outside the scope of corporate tax regime. But if there are other service providers, suppliers, contractors, etc., who are working here, providing their services, using their equipment, they can very well have a permanent establishment in the UAE. And therefore, their profits from such activities will be liable to tax depending on further conditions being satisfied. As I discussed in the beginning of the concept of permanent establishment, preparatory or auxiliary activities do not constitute a permanent establishment. So suppose if there is a foreign company, it has a branch office in the UAE, but this branch office is engaged in providing preparatory or auxiliary activity to a client, then this branch office may not be treated as a permanent establishment provided they are not doing any other activity. So even though a branch by default is treated as a permanent establishment, if it is providing preparatory or auxiliary activities, the income of the branch will not be actually liable to tax. Although in such cases, the concept of income itself does not arise because these activities are more of an expense. Now, what is going to get included in preparatory or auxiliary activities? It specifically includes limited marketing and promotional activities. So if, let's say, for example, the foreign company has some product which it supplies to customers from outside UAE, and there is a fixed place of business through which marketing is done, a limited marketing and promotional activities are done, then in that case, this will not be covered as a fixed place. Second is performing market research. And third is attending seminars or convention. I mean, performing market research is something simpler, so I'm not getting into the detailed explanation around it. But if there is some seminar organized, let's say by some company, and there is a person from the foreign company who comes and attends this seminar, which helps them identify whether or not they want to set up a company to start with, or whether they just want to conduct business from outside UAE. All these attendance of seminars or conventions is not treated as resulting into a PE, because these activities are considered as preparatory and auxiliary activities. But it is important to see that these activities should be all that has been done. If a foreign company has a branch office which is engaged in complete business activities, just because it is also doing limited marketing and promotional activities would not exclude it from the fixed place PE, because there are other activities also which are involved. Now, one of the other cases is where the goods are stored in the UAE. So let's say there is a foreign company based out of USA and it has a fixed place of business in the UAE. But the purpose of this fixed place of business is to store goods, is to display these goods, or deliver the foreign company's goods in the UAE. Then this fixed place of business will not be treated as a permanent establishment in the UAE for this foreign company. In addition to this, keeping stock of goods for the purpose of processing by another person. So let's say if in this particular place, there are certain raw goods which are imported. These goods are processed by some other company which is based out of UAE, and the sole purpose of keeping the stock of goods is to make them available to another person for processing. Then in that case also, the PE of the foreign company in the UAE will not arise. So in such a case, if there is no PE, then whatever business profits are earned by the foreign company, they will not be liable to tax in the UAE. Let's briefly look at a few case studies relating to permanent establishment, fixed place of business test. So in this particular example, what is happening is that there is a foreign company, FCO, and it is engaged in providing consultancy services in the UAE through a branch office. Now, this branch office is basically providing services to a company in UAE. The FCO employees are working from the branch office in the UAE. So they are sitting here and working. It provides certain services to the clients in UAE, and part of these services are also provided by overseas employees of the foreign company. So this being a branch office, by default, it will be treated as a permanent establishment of the foreign company in the UAE. And because it's a permanent establishment through which the business is carried on, the profits earned by this permanent establishment will be liable to tax in UAE. Now, one thing which is a bit different here is that the services are not only provided by the branch office, but there are some foreign employees who are sitting outside the UAE who are also engaged in provision of these services. While the detailed law is something which will come and things will be more clarified at that point in time, as a general rule, these services, when provided by employees outside the country, are not considered as a part and parcel of the permanent establishment, but they are taxed under a different clause, generally Article 12, fee for technical services, and therefore are subject to a different tax rate. Now, the OECD model in some cases may not have this clause, in which case one needs to go for the interpretation as to how these will be taxed. But as a general rule, activities done outside UAE, which are not related to the employees or activities performed in the UAE will not get attributed to the permanent establishment and therefore will not be liable to be taxed. Let's look at another example here. In this case, the foreign company has a branch office in the UAE. The LLC, actually not the LLC, this is the branch office, provides coordination services in connection with trading of goods by an Indian company outside the UAE. So the Indian company is based outside the UAE. Both the buyer and the seller of goods are based outside the UAE. So in this case, if you remember, a branch office in a free zone is considered as a free zone person. If a free zone person provides services in connection with transactions outside the UAE, then there's a 0% corporate tax rate that is applicable on them. One thing which is applicable universally across all jurisdictions is a law is that if there is a specific provision, tax provision dealing with a particular aspect, then the general provision will not apply. In this case, because there is a branch, a free zone person, which is eligible for 0% corporate tax exemption on transactions which are done outside the UAE, they will be eligible for this 0% tax rate. Of course, there are other conditions, etc., which we had discussed in the preceding part of this course. You need to refer back to them also to see if there are conditions or situations that may deny exemption to this branch office. Let's look at one more example on fixed place. So in this case, a foreign company is engaged in providing consultancy services in the UAE through an office space. So this is a foreign company, it has an office space and it is providing services to third-party clients. EFCO provides certain services to certain clients in the UAE. It also provides coordination services in connection with trading of goods by an Indian company outside the UAE. So insofar as this office is concerned, it will be considered as a permanent establishment of the foreign company. The income derived from providing services to the clients in UAE will obviously be the income of the permanent establishment and will be liable to tax. However, what is important here is one needs to see if EFCO is the coordination services that it is providing, are they going to be taxed as well? So like I mentioned, initially, if this were a part of free zone, different provisions would have applied. But let's say this company is in mainland or the office is situated in mainland. In that case, if the employees are sitting here, they are providing services, most likely, I'm again saying most likely because some treaty provisions, some law provisions will need to be read here to see if it is taxable. But the income, because it is done by the people sitting here, it might get attributed to the income of the PE and therefore will be liable to tax in UAE.